In the fast-paced world of business, finding a clear path to profitability can be a challenge. Welcome to 0 to 100 with your host, Jared Guy Randolph, seasoned business and finance expert. Tune in for actionable insights and strategies to accelerate your business success.
Hello, Accelerators. Today on 0 to 100, I am very excited to introduce our guest, Lydia Merritt, who is the owner and founder of MLP Accounting and Consulting. She is a BS in accounting as well as being a certified public bookkeeper, works with clients across the U.S., educating them on how to grow their business and become more profitable, two of our favorite things. Some of the subjects that we are going to cover are going to be raising your prices, how to do it properly and when to do it, profit first, becoming a stress-free entrepreneur, and using debt as a tool to grow your business. For those of you who do not know me, my name is Jared Guy Randolph. I am the founder of BoxFi. We are the nation's leading payment consultant, providing business growth solutions through payment processing, and I'm excited to share the network that I've built over my 25-year entrepreneurial journey to help you grow your business and become more profitable. Ladies and gentlemen, let's accelerate together. Lydia, it is great to have you on 0 to 100.
Thank you for having me, Jared. I appreciate the opportunity to talk to you about finances and how to help small business owners be more profitable.
Awesome. So you are the CFO extraordinaire, and you work with a lot of SMBs, which are our audience members, helping them streamline their financials, their personal financials, their business financials. Can you talk to me, number one, about some of the misconceptions that business owners have around their financials and how you help them clear that up?
Yeah. So a lot of times business owners, think about their financials in this system of, hey, it's that thing that I need to do for taxes. I've got to do something with it. If I've got money in the bank, I must be doing good, kind of thing, or, those type of things. And so they're like looking at it from looking at their financials maybe once a year, maybe not even that. They may take their information to their tax preparer and just be like, okay, tell me what I owe, and that's about all they do with it, So sometimes, I try to work with them to help them understand, hey, this needs to be a more frequent topic. We need to look at this more frequently. This is a tool in your toolbox for you to be able to make financial decisions. And when you don't focus on financials, then you kind of get that downside, that downside of you don't know what you don't know. You don't know how bad it is, or, and that can be a lot of the reason why people avoid it, because they're afraid of it. They're afraid of numbers and seeing what the actual numbers will tell them. And so it's kind of scary. And so we try to take away the scary part for them and try to make them understand. First of all, it's very common to be scared of your finance. People, it really isn't a monster. It is what you make of it. But, just looking at it and giving it a name, giving it, that takes away the scariness of it, and being able to see what is going on and what you're doing and figuring out how to use that then for your business, rather than it being some big scary, I don't know what to do with this over here.
So here's a question for you. I'm a business owner. How many times should I be looking at my financials to make sure that everything is in order personally, meaning me as the individual? And how frequently should I be looking at my financials with my CFO or my CPA or tax advisor?
I would say you as a business owner should minimally be looking at that once a month, once a quarter at the very, very least. Like if you're a really tiny business, you might be able to get away with once a quarter. But, most businesses, they need to do that at least once a month, be able to see what is going on in their business, sit down with their accountant, their bookkeeper, their CFO, someone who can help walk them through those numbers and help them understand what they mean, where they are, what this means for their business and what they can do with that information.
So when you're sitting down with a client, especially with a new client, What is it that you're going to be looking at in their financials to gauge their financial health?
Well, first of all, we're going to look at, the debt to income ratio. We're going to look and see, how leveraged are they at the moment? Do they have a lot of debt? Do they have a lot of credit cards that they're using? Are they financing their current expenses? Are they needing to take out loans to be able to make payroll? Those type of things. So we're going to look at all of that information. That is typically going to be on the balance sheet. And sometimes isn't even being recorded because the owner doesn't know that it needs to be recorded. And if they don't have a good bookkeeper, they're not asking the questions going, well, what are we making this payment for? Where is this going? What is this attached to? What are our assets that if we have a loan, what asset is that paying for? What did we use that for inventory? Did we buy land? What's happening here? And so that's a big thing that we look at is to see, debt to income ratio, where's that? What is that coming in? We also look at their current expenditures versus their income as well, like just their day-to-day expenses. Check
Mhm.
to see, hey, where are we when it comes to our break even? Are
Mm.
we close to break even? Have we, overextended ourselves in our expenses to where we're not even breaking even every month? And we'll check those and that information as well to make sure that, and that can be a thing that might be adjusted with pricing, or that might be a thing that we would need to, reduce expenses on. So it just kind of depends on the client situation. But those are the things that we really look at. And like I said, we then will dig into, okay, what is the problem? If we're overextended, is it a problem that is we're just not charging enough for our product or our service?
Mm.
A lot of people don't know how to calculate that out and figure out, oh, I need to make at least, if I'm selling a product that costs me $6, I need to be making at least, $8 to give me some profit there. They may not be thinking about, oh, well, I also have overhead on this that is that extra $2. And now, maybe that overhead is $3 per product. And now I'm losing money on every item that I sell. We kind of work with them to help them understand, how to look at all of the pieces that go into making a product or providing a service so that they can make sure that they're pricing it appropriately to at least break even, at least get slightly above profit. And then we start looking at, okay, now how do we fix those other areas? Do we bring down our expenses? What areas can we cut? Are we using multiple pieces of software where one piece of software would do the trick? You know,
Right.
I personally have just recently gone through, a stage where I was like looking and, conserving, well, what softwares am I using? And going, okay, well, for one, I noticed, hey, I'm paying for Zoom, but Google Meet does the exact same thing and it's included in my Google Suite that I'm already paying for. Why am I paying another cost for another piece of software if this one is going to do the same thing and going to, do that? And so we look for things like that where we can help our clients go, okay, yes, you need, for example, in my business, I need an online video software so I can communicate with my clients and work with
Right.
them.
Right.
But do I need Zoom or can I use, something else that's already built in? Do I?
Well, I want to talk to you. I want to talk about the expenses, and I want to stay
Mhm.
on this topic. So let me jump in because I think this is really important. Balancing operating expenses and the cost to create your product or service is can be a fine line for a lot of businesses. How often should a business owner be looking at their actual pricing? Because I feel like it's secondary for a lot of business owners in terms of increasing their pricing. I've had
Yeah.
some of the merchants that we've worked with in my business say, oh, well, we haven't increased our prices in 8 years. Well, I'm sorry, inflation happens and it's a real thing. What do you mean you haven't increased your prices? So that means your margins have gone down dramatically. And I know you're not making as much money as you did 8 years ago. What calculation do you put into place to raise your pricing, and how frequently should you be looking at raising your pricing for your product or service?
Well, a good rule of thumb is to look at what the current inflation numbers are doing and kind of use that as a margin for like, okay, if inflation is 5%, maybe we want to increase pricing by 6% annually, just as a rule of thumb, to at least increase by that based on what's currently going on in the world. Now, certain industries will have higher increases sometimes than others. And so we're looking at, maybe construction industry, the cost of construction materials may have gone up quite dramatically, and those can fluctuate very quickly. And so with a construction industry, you're probably going to want to increase your and look at your pricing on a more frequent basis than maybe another industry that has a more stable price ratio where where your costs are a little bit more stabilized. So I would say at a bare minimum, look at it annually for sure.
Okay.
Quarterly or, depending on the industry you're in and the situation in the world. Sometimes it's just a matter of, hey, the situation in the world has changed. And I know back in 2020, cost of construction materials skyrocketed just because people weren't able to get it. And so many people were doing home projects because they were at home and they were like, oh, I need an extra room in my house so I can so I can work from home. So now they're like, there were additional construction projects going on. And so the cost increased. And so what a lot of the construction people did was like, hey, I don't know the price is going to be from today to next week. I can give you that price when I get there and I can actually look at the numbers and see what that's
So
going
do
to
you
be for
think
me.
that that's a way, do you think there are other industries, like in terms of your business, that you've seen that have pricing that fluctuates or have had a substantial increase in the cost of their goods to do business other than construction?
I would say anything where you're doing importing pieces from overseas, that has seen an increase in the last couple of years and is definitely going to see an increase in the next few years. If you're importing anything from overseas, with the tariffs and stuff, that is going to cause the price of goods to go up. But, that's something that is kind of predictable knowing that's going on. I've heard a few people say, some of the industries have already prepared and we're like, we're going to go ahead and buy as much as we can now because we don't know what the prices are going to be in 6 months or in 3 months. So we want to get as much of our raw materials that we're getting from other countries into our forces. So in manufacturing, we're seeing that a lot. I don't know what other industries off the top of my head. I know that groceries, of course, everybody's seen and felt that the groceries have gone up at the store, but I don't know that there are very many small business owners that are working in that field that may be seeing that increase a lot for them. So I'm not real sure what on those.
So let's talk about, we went from looking at what you need to do to increase pricing based on inflation, giving yourself a margin. How important, beyond the expenses, which we touched on, and how ways in which you could reduce that, how important is it for a business owner to focus on profitability?
No, it's very important. If you're not making a profit, you have a hobby. Essentially, if you're not making a profit, you've essentially got a very expensive hobby where you are spending a lot of time, you know, chasing money, trying to pay the bills. And it gets very tiresome and very exhausting when you're in that position because you're robbing Peter to pay Paul. And it's just very exhausting for a business owner to be in that position because it's, your personal and your business lives are so intertwined. So that means your personal finances and your business finances are going to be very tight. It's going to be a struggle. And I feel like that's where a lot of people are, they're at that cusp where they're right there by profitability, but they're not making enough to be profitable, at the end of the day. And so we work with them to help them see that and to help them work with those things so that they can become profitable, have less stress in their lives, be able to pay their bills, not, that weight of not having to deal with the debt collectors, not having to worry. Now, it does come with its own price because obviously if you're making a profit, Uncle Sam wants his cut, you know, on that. But you have to balance that with, hey, I have an actual profitable company that has longevity. It's not a company is not going to be sustainable if it's not making money over the
So,
long term.
so as a business owner, you have to focus on profit first to run a real business. If not, it is a very expensive hobby, and nobody wants just a very expensive hobby. And I love
Yeah.
that you said that because I do feel that, and what I see is a lot of business owners are scared, frankly, to increase their pricing, to pass on their fees to their customers and they're bearing the brunt of the increase of those cost of supplies and material, and they're making less money and ultimately becoming more frustrated. And then they're not providing that top level service that they could if they actually had a business that was profitable. If you go to work every day, you're miserable, you're not having a good time, you don't have a good relationship with your employees, you don't have money to invest in your business, then what the heck are you doing as a business owner? You
Yeah.
have to charge your customers what is appropriate for that product in the marketplace and stop being so scared to increase pricing because frankly, again, to your point, you've got a very expensive hobby. If you're not making profit, then what are you doing? Why you're not running a
Right.
business?
You might as well shut it down and go work a 9 to 5 job at one very percent and pay your bills. You know what I mean?
So when you're working with one of your clients, how do you create the a structure around helping them become more profitable and then having that balance in having enough money coming in personally and having enough money coming in to operate the business and grow the business?
Well, we work with a system called Profit First, as you mentioned. I'm not sure if you're familiar with the book,
Oh,
like a
I
little
the
bit.
book. Oh, it's not next to me, but I actually did. As you know, I think you know, I'm a big reader, and I do a
Mhm.
book review on every single week on a book, and I did that a couple weeks ago. Profit First for my business was a game changer because I had never looked at taking my profits first, but I'm going to let you dive into it.
Yeah, absolutely. And basically what that does is, and you can correct me if you feel like this is a wrong analogy, but I've always felt that what he does with that is basically take your basic budgeting principles and the principles of like envelope budgeting and that sort of system, modernize it, electronifies it for the modern digital age, and then makes it practical for your business so that you're taking that money, you're putting it into those separate buckets, those separate envelopes, if you will, for profit and for owner's pay and for, your operating expenses and taxes. And so you've got those 4 buckets that you're putting money into, and you're able to keep track of where everything's going. And because business owners, again, they're scared of their financial statements, but also they're just from necessity, we look at our bank balance to see if I've got money to go do something.
Mhm.
I do it, you do it. I'm sure most business owners I've talked to, they don't go and pull up their financial reports to see if they've got money to go do something. They look at the bank balance and go, do I have the $700 that it's going to cost me to do this thing? Yes, it's in the bank account. I can do it. That's how we do it. And so having that set up in a way that it's sheltering the money, putting it aside so that you're doing that. It's also kind of reminiscent of the pay yourself first model that a lot of us may have heard about when we were starting our first jobs, and they were encouraging us, to put money in our 401k or in our savings account directly from our paycheck. Because if you don't see it, if you get it moved over first, then you're not going to necessarily miss it as much. And so there is like that psychological piece to it. And so working with that, we work on percentages to figure out based on industry, based on the income level of the client. We work with them to discover what percentage should go into each bucket. And then from there, we can look at, okay, this is what I want my owner's pay to be. This is what the percentage is going to afford me currently. And then what I can use that percentage to back into what does my overall revenue need to be if I want to be able to pay for, my kids' college or that dream boat or vacation home that I want. I can back into all of those numbers and build those up over time. Obviously we're not necessarily going to be able to do that tomorrow, but those are all nice goals to have that we can then work our way towards. And so I can look at that and I can say, okay, to pay my bills, I'm going to need X income. Okay, that income is 20% of my overall income overall sales. So then I can back into, okay, how much do I need in sales by running those numbers backwards?
So I want to stay on the profit first, because first of all, I love that you brought that up, and it's like my jam these days, because now I've never looked at my business this way. And the concept of profit first is your revenue less profit equals your expenses. And it's not that you're taking 20% or 30% out of your revenue as profit. It could be 2%. But your business, if let's just say your revenue is $100 a month, if you were to take 2% out of that, $2 a month, and put it towards profit, you absolutely can run your business on $98 if you were able to run your business on $100. And that's
Absolutely.
conceptually, it just sets you up mentally at a place where you actually are starting to put money aside that is an account that can grow, and you can also grow your business. And what I'd love to hear from you is, since this is something that you focused on with your clients, maybe a success story or some of the challenges your clients typically face when first going into the mindset of profit first.
Yeah, absolutely. So, we get clients that start out, they're not putting anything aside, they don't really have savings. They stress about paying their tax bill every year. And then they start utilizing profit first. So they're putting that money aside. And, maybe that one of the biggest success stories that I can think of is we had a client that was thinking, oh, my I'm still having a little trouble writing these expenses every month. That expense account keeps getting low. But then his wife sat down with him. It was a husband wife company, and they were working together. And she was like, but you got to think about the fact, before this was all we had. This was the only thing that we were, and we still had that tax bill that was due. Now, this is just the operating account. And we've got, in their case, I think it was like $12,000 in their account, in their tax account, that they were then able, when the tax bill came due, they were able to go in and write a check for the tax bill, stress-free, and pay that tax bill and not have to sit there and go, oh my gosh, where's the money coming from? Because, we ran our expenses down to zero again. And so when they looked at that, and then they looked at, oh yeah, in our profit account, we've got, this amount of money, and we're able to take the kids and go do a special fun thing with our quarterly dividend from the profit account. And that, and so they were like, oh yeah, we're seeing this. Oh, and we're paying ourselves, we're paying our own salaries. We're getting paid now. So that was, it was like, it clicked because they were able to see that, and they're able to work on it. And like you said, we start small, building that muscle. We're going to start with 2% and build up, and we're going to gradually increase that to where, it's something that we can actually do. We're not going to jump in and be like, okay, you got to slash your expenses in half, if that's not going to work, just like a physical trainer would have you start small and do small increments. These mental muscles need time and slow increments to start and to change habits. And so we work with clients to help them do that. I would say probably the most challenging thing that they have is keeping your hands out of the cookie jar, so to speak. I know in his book, Mike Michalowicz really stresses the idea of having those no temptation accounts and moving that money out of those, to a different account where you can't get to it. And I 100% echo that, because if you don't, it's sitting there and you're like, oh, I really need that thing, whatever it is. And so you dip into that account and you pull it over, and then all you're doing is spending a lot of time chasing money.
You know what's funny is, I've at one point in time, if I remember correctly, because I've been an entrepreneur now for 25 years, it was always,
Mm.
streamline your accounts, try to cut them down, etc. I've now found that having multiple accounts is making me be more accountable and actually pay attention to what is going in and out of every account. And now I have a third bank where I
Mm.
have that profit account where I
Mm.
put the money in it. I just consider that is something that I cannot touch. And it's not calculated on any of my other numbers, which has
Mhm.
really helped me in the operations, the financial operations of my business. And what I like about the concept of McAllowit's book, Profit First, if you have not read it, read it, Profits First. Also, go on LinkedIn. You can see 2 weeks ago, I did a book review on it. It's incredible.
Mm.
It's the concept of cash envelope budgeting. So post World War II, which would be my grandparents, they had literally had an envelope with cash in it, mortgage, car payment, insurance, groceries, cable, et cetera, et cetera, et cetera. And when that money was gone, it was gone. And frankly, that is the generation who, as they have passed in the recent years, they're leaving money to their families, and people today have no money to leave to their families. And their salaries were a tenth of what salaries are today. Granted, expenses were much lower at that point in time as well, but they put money away because they understood what budgeting was. And what I realized, and I'd love to hear your thoughts on this, Lydia, is that tangible, literally touching that money. And when you reach into that envelope and you've got $1,000 and all of a sudden you only have $720, and then you have $500 and you have $340, it changes the relationship that you have with money. Digital wallets, digital money has actually been incredibly negative for businesses because you're not paying attention to what you're doing financially.
I think it is in some aspects easier to spend because you don't see it necessarily.
Right.
But I do think that we have a better tracking system now.
Mm.
So having it there, every dollar is tracked when you're running it through your banking system. So as opposed to with cash, it's easy to spend that cash and then forget what you spent it on. With the digital system, you got that running total that tells you exactly what you spent it on, helps you, be able to track that a little bit more accurately in that aspect. I think it's just a matter of making that correlation to the digital money is real money. You know,
Mm.
when my kids were little, there was, we always heard, give them cash money for their allowance so that they can see it, they can spend it, that sort of thing. And there was a long time when, they didn't understand, what a debit card or credit card was, and that, mommy swipes the card and mommy gets money, how does that work? So can't you just swipe the card and get more money? You type of a thing. But we actually discovered a digital allowance system that we were able to use for our kids that gave them prepaid debit card systems called FAMZoo is the name of the card company we use. I think Green Dot is one that's become very popular these days. But the thing with those cards was I noticed my kids suddenly had an understanding because I was putting money on their card, and then they were able to track on an app how much money was left and where that money went. They suddenly got that concept of, oh, this is how real money, digital money works. This is how the card works. So then it was less questions about, well, why can't mommy just go and, pull money from the magic card? They
Mm.
started understanding how cards work and how money works in that concept. And so I think it's just a matter of making sure that we remind ourselves, this is real money. This is real, this is really happening whenever I send this, and tracking that. That's where the importance comes in, is like tracking those balances and knowing, hey, I spent, watching those numbers change, whether it's that physical cash or looking at the numbers on our balance on the app.
Lydia, you said Green Dot. What was the name of the other app that you spoke of?
FamZoo.
Fan Zoo?
Fam as in family.
Fam. Gotcha. Zoo,
Yes.
Fam Zoo. It's funny. I'm going to, and literally it's just because I have to update some things on my account. This is not a pitch in any way, but I use this group called Cube Money. This is my card right here. Cube with a Q. And what it is, it's digital cash envelope budgeting. So let's say I've got a $10,000 budget. It's on the personal side. It's not on the business side. I've encouraged the owner, who actually was blessed to have on on our podcast as a guest, to do this for businesses also. But I can budget what my mortgage payment, my car payment, my gas, my groceries. And then when I go to pump gas in my car, and let's say I've got $150 for gas for the month, I open the app and I click that I'm going to pump gas. I swipe the card, and if $40 come off for gas, then I have 110 left. So I know it's actually budgeted under my gas line item. It has been the coolest thing. And little nuanced things like this, and this is why Profit First has been so helpful, is it's this very similar concept because you have separate accounts for everything. It's actually having that connection with your money. And it sounds like that's what you're describing that you've done for your kids. And I think even us as adults, my generation, which I am an elder millennial at 41, makes me want to throw up to even say millennial. As an elder millennial, we didn't necessarily have that same financial acumen that over the last 6 years in my life in business, I've spent the time educating myself so I can run a successful business, so I can run my finances personally successfully.
Absolutely. Absolutely. And I find, like, when I'm talking to some of my clients and we're talking about these principles, they're like, no, I could put this in place for my personal. I'm like, absolutely. They translate to your personal. You can take information from your personal and translate it to your business. You can make this as complex or as simple as you need it to be. So if you need, there are people out there who are landscapers, or I have some that are photographers, and their business fluctuates. They have busy seasons and off season. And so for them, it's very important that we create a drip account that they put money into during the busy seasons that they can pull out of during the slow seasons, so that they can keep that steady payment to themselves and to their staff and to their vendors, to keep everyone happy over those slow seasons, so that they're not stressed about money, going, oh my gosh, we've got, I've got 2 more months, or I've got another month before I get cash. I'm able to get cash in my wallet. How do I pay my bills?
Right.
So we work on situations with them to help them figure out what's going to work best for them, and
So one thing that I want to stay on, since you're talking about a business that might be a seasonal business and creating that drip account, figuring out what your financial plan is for your business, for your personal life, can be incredibly overwhelming and cause a ton of stress. And most business owners are not stressed because they're worried about the cost of goods or filling their restaurant or customers. They're actually stressed because they don't have those financial management tools in place. What are some of the key things that you can do and you would advise the owners that you work with to organize their lives and their mindset around reducing stress and still running a successful business?
I think one of the biggest stressors is like you said, the financials, being able to pay our bills. So if we can sit down and figure out what are our must-haves, what are our must-pays, what are the things we have to do to keep the restaurant doors open and to keep the lights on at home, those things. Figure out what those are, what those needs are, and then set goals to meeting those needs and making sure that we can meet those needs. Then once we have those in place, then we can work on, it's kind of like Maslow's hierarchy of needs, the hierarchy of needs, that pyramid where, once we've got our shelter and our basic needs taken care of, then we can worry about these other things. And we can't get to these higher levels of peace and safety and love with when we aren't having our basic needs met. So if we can get those basic foundations set and be like, okay, yes, you really can pay your bills with what you're making right now. Or in the worst case scenario, with what you're making now, you're not going to be able to pay the bills. So let's make a plan to get to where we're paying the bills.
So
You-
let's dig a little bit deeper. And
Mhm.
for a typical business, that might work. But
Mhm.
let's say that you have a business owner that comes to you and they're in debt, 50 grand, 100 grand, 250 grand. How do you help that business owner change their mindset? How do you help them reduce their debt? How do you help them put money away? What would be the plan if you had someone who comes to you and they're like, listen, I really need help. This is my situation.
We would sit down and work with them to see um what do we have on hand? First of all, what is here? What is our reality? Which that is often the hardest part, is sitting down and getting a reality check with a client, because it's hard to be honest with even ourselves about where we currently are sitting. And that's probably the hardest part. Once we get real about where we're at and what the situation is, then it's always just, I know it sounds very simplistic in the fact that okay, this is what's coming in, this is what's going out, this is what we can pay, and we put a game plan together. Debt snowball. What's our possible debt snowball? What do we have $25 that we can throw at this debt? Where do we start? What's the lowest interest debt that we can pay off first? Which creditors are going to work with us? And so we'll talk to creditors. We can talk. I can't personally, but I'll work with the business owner and help them talk to their creditors, and help them, figure out what to say, how to deal with the creditors. We can talk to them, and figure out, okay, what's a game plan for paying off this debt. The idea is to then create a plan that will get us from point A to point B. Point B being, we want to be debt free. We want to pay down, X number of debt by this point. And, and breaking that down into smaller steps that they can do over time. And really, like anything, it's like any goal that we set, anything that we make. If you want to lose weight, you've got to eat less. If you want to, eat less, exercise more, essentially. So if you want to pay down your debt, you gotta spend less and make more money. Yeah. So then we're talking with the client, we look at the different ways that they can bring in more money. What can we do? What is currently working for them in their business? What could we, improve upon? Is there ways that we can bundle things and bring in, can we change something to make a membership that makes it easier for clients to be recurring? Things like that. And then we'll look at, we can look at everything from, hey, how many hours a week are you spending on this? Is there a way to get a second job if you need to, because they've got, if they've got debt that is really overwhelming, that might be a reality for a few months, for 6 to 12 months, get, double up on the income so that we can, get out from underneath the debt and the creditors, and get ourselves on
Lydia,
proper financial footing.
I want to thank you for that, what you just said. Sometimes you need more income, and that might mean a spouse working another job. If you're working in the company together, that might mean you, for a period of time, working another job to dig yourself out of the hole. You have to start somewhere, and starting somewhere is acknowledging it, coming up with a plan, and following through on that plan, and cut up your darn credit cards if you can, because those are one of the things that kill a lot of businesses. Now, once you get to a certain level, it might not be as stressful. You might not have those issues. But I really love what you said, is sometimes you can't overnight drive more income to your business, and it might mean someone in your household getting another job.
Yeah.
That's a great point.
And two, I love what you said about credit cards, because they can be can be a pain, but also learning how to use debt appropriately and using debt as a tool and not a crutch is often the biggest thing that we have to acknowledge and work with is like, food is, I look at it this way. Food is good for me, right? If I don't eat, my health is going to suffer long term.
Yes.
But my relationship with food has not always been a healthy relationship. And I have not always been able to, I have often overused that, overeaten on sweets or, pastries or things like that, that might then also affect my health detrimentally. And so I think that there are ways that we can use that appropriately and credit cards can be used appropriately. That is something that I work with my clients too on how they use their debt and using their debt to their current, debt that they have. One of the tools that we use is using that as one of our envelopes, for example. So we have a credit card, for example, maybe that's maxed out and we've been paying minimum payments on that credit card. If we translate this credit card to our gas card now, and we put our gas budget on this card every month and we pay the gas off, use it to buy our gas, what difference does that make to the credit card company? Technically, nothing's changed. But for me, it's freed up, let's say, a $50 minimum payment that I've been making. I translated that into $150 that I'm putting on that card. Suddenly I'm paying more than my minimum to my credit card. And I'm using the credit card in paying it off and using it and paying it off, which improves my credit rating with the credit card company.
Are there other ways that you can suggest that business owners use debt as a tool?
Yes. I like to recommend if you can get a credit card to do your basic subscriptions and things that you do on an annual basis or monthly basis where you have that payment automatically coming off, put it on the credit card, pay the credit card off every month. If you can get one that gives you points, even better, because you can purchase things with that. You can, maybe it's miles, I prefer the ones that let me buy gift cards, but those are, different things. I would then turn around and buy a gift card for Panera Bread or Starbucks that I could then use either as a gift to a client or I could then use it when I go out to Starbucks to meet a client or to Panera when I meet a client. Different things like that are ways that you can use that to where it's paying you to use the card. You're not, getting the interest and getting stuck on that. Things you have to watch out for are obviously maxing them out every month, going above your credit limit, those type of things. You want to keep within your credit limit. You want to keep within and keep it under, really they recommend under 30% of the balance. So if you have a $1,500 balance, you don't want to spend more than $500 on that card at one time to keep it, rotate, to keep it under that 30%. But still, it gives you a good, it's there in an emergency. I feel like sometimes we're so scared about it and we feel so bad, but sometimes, life just happens and it's not always good and it's not always easy and you get stuck and you have to do the emergency thing for a little while and then you dig yourself back out of the hole because that's life.
Yep.
It does us no good to shame ourselves for getting into a bad place.
Sometimes you got to give yourself grace and keep moving.
So before we go to our rapid fire section, I'd love for you to talk to the audience about 2 or 3 things that they can do for 2024 to prepare for financial success within their business.
Awesome. The first thing I would say is if you're not tracking, start tracking. Find some sort of tool to where you are tracking what you're spending, when you're spending, and figure out all of your expenses for the year. Be able to sit down and pull those numbers and look at, how much did we spend on software this year? How much did we spend on car maintenance if you're using your vehicles in your business, those type of things. go through those detailed numbers. One of the areas that a lot of people don't realize, bank fees. Bank fees will eat you alive. Late payments on credit cards, bounce checks, anything where you go into overdraft with your bank account, those are going to hit you. And I mean, you're paying your bills, life happens, you forget something, it bounces, no big, but if it happens a lot, you can end up with hundreds and thousands of dollars of fees. That is an area where people can, if you can get that down and be like, okay, we're paying set that payment to go earlier, set an automatic transfer from the savings maybe to keep a buffer zone in there. If you get to those things, those can save money, but you can't fix what you don't acknowledge. So first of all, figuring out what those finances are, where they're at. And then sitting down with somebody, making a plan for a regular basis to sit down and go over these numbers with somebody to help you figure out a plan for what to do with that information. How do I utilize this information? How, educate yourself, whether it's reading a book, listening to a podcast, talking with with someone, with an accountant, with a bookkeeper, someone who knows your industry, knows your business, and help you work through those questions that you might have. Well, what does this mean for my business? How can I reduce these costs? What can I do? And, and then working on that plan. It's really all about, like you said, acknowledge where we're at, create a plan, and then work on it. And, make those meetings, your most important meeting of the month. That's your most important meeting. You're sitting down and figuring out your numbers and knowing what you're going to do with those numbers.
Lydia, you ready for our rapid fire section?
All right, here we go.
Give me, this is the fun stuff. Give me quick answers here. Coffee or tea?
Okay. Tea.
It is a zombie apocalypse. You have to leave your home and protect your family. What will be your weapon of choice?
Gun.
What book would you recommend that our audience of entrepreneurs and business owners read to help advance their business?
Profit First, hands down.
Yes. Air 5. I love that. Dead or alive? If you had the opportunity to have dinner with someone this evening, who would it be?
George Washington.
Founding father. There we go. Let's say that you are a small business and you're doing $100 million in annual sales. And Jared walks through your front door and hands you a $300,000 check. As their CFO, how would you advise them to invest that $300,000 to help grow their profits over the next 12 months?
Well, first of all, I put it towards any debt that they have, reduce debt. Second, put it in something that's going to earn the highest interest rate that they can possibly get, and put enough in there, and then put some aside so that they can, pay or use some of that money towards an advancement opportunity that they've been working towards.
Awesome. And our last question. Tell me 2 people in your life who have helped you get to where you are to build the level of success that you have in your business.
I would say probably my spouse, because, lots of patience and extra time with me being away and working and, doing things late nights, that sort of thing. And then I'm trying to think who else. I've had some good close friends who work with me and help me, encourage me along the way. Other business owners that are very encouraging as well, and that we work together quite frequently.
Beautiful. Lydia, tell the audience where they can connect with you if they'd like to do so.
If you'd like to connect with me, you can find me on Facebook or Twitter under Lydia Merritt. You can find our Facebook and Instagram on Lydia Merritt. And then also Breakaway Bookkeeping by Lydia is there as well. And then you can also email me at lydia@mlpaccounting.com.
Beautiful. Lydia Merritt, thank you for joining us on 0 to 100.
Thank you so much. It's been a pleasure.
Thanks for tuning in to 0 to 100 podcast. We hope you feel inspired and ready to accelerate your business. Remember, your journey to success starts with a single step. Keep learning, keep growing, and keep striving for greatness. For more resources and show notes, visit jaredguyrandolph.com. We'll see you next time.